my goodness, I mean, what a welcome expose on just how corrupt Wall Street is.
Upon the breakout, gold's going to make a new all-time high.
Gold-backed ETFs seeing inflows of over $5 billion.
$0.8 trillion gold market.
Why are we the only guys that seem to understand this? Makes your head spin.
Welcome to Live from the Vault. And as you can imagine, the Live from the Vault community keeps growing bigger and bigger. And we thank you from the entire Live from the Vault team worldwide. And wow, do we have a great episode for you today. You know, Andrew's market update has been pushed back to next Friday so that we can bring you this very special Hollywood blockbuster special. You're not going to want to miss any part of this. We're going to be talking to the director and producer of a brand new documentary film that's about to come out this weekend. It's called The Paradigm of Money. Now, The Paradigm of Money goes deep into the infrastructure of the global financial system and exposes corrupted policies, creating a path for money to be transferred from the middle class to the 1%. And the 1% now hold more wealth than the entire middle class. Unbelievable. We're here to talk about this new film launching that's going to happen this weekend. You're not going to want to miss it, like I said, and you'll find all the details of this brand new film on how to watch it. Just look for the link below and the details below. Again, you're not going to want to miss any part of this episode. Fasten your seatbelts. Now, if you're in the LA area this weekend, then they're going to be doing a Q&A, and tickets are available right now. Again, look for the information below. And just before we get to Talking Gold with Andrew Maguire and our special guest, please keep spreading the word about this channel by liking, sharing, and smash that subscribe button. And then click on the bell notification if you want to be notified as these episodes go live. So with that, let's head over to the UK and Talking Gold with the one and only Andrew Maguire and our special Hollywood guests. Over to you, Andrew.
Well, thanks, Shane, for the introduction. Today is a real special one. I think, you know, we've got two people here that you're probably going to know and heard of. Pete Antico and Sean Stone. I think Sean probably needs very little introduction. Pete Antico, look, he's. I mean, you know, I'm sure you've come across things he's been in. He consulted, for example, in Oliver Stone's Wall Street 2. I mean, look, he's got a massive economic knowledge about how Wall Street, how these quintessential hedge fund managers operate. And that's a very kind word for what these guys do. But I think what we're looking to do today is to give you a chance to preview a fantastic movie which is just about to launch. And I think, so really, I mean, obviously, I'm very, very proud and honored to call Pete a friend. It's nice to meet Sean. And look, I'm really excited about this upcoming movie, guys. I did get a preview of it. Thank you for that. And my goodness, I mean, what a welcome expose on just how corrupt Wall Street is. And then I was pleased to be able to contribute my experience as a whistleblower. I providing evidence to the CFTC, the regulators. Hey, where were they today? And DOJ, price rigging in the gold markets is what we were representing. But most of all, Pete and Sean, what I love about this movie is how it casts the net out to a really wide audience, maybe an audience that we wouldn't normally touch, certainly from our Live from the Vault side of things. And I think as market participants, I think our job is to deal with Wall Street corruption on it. You know, we deal with it on a day-to-day basis. But this movie is, to me, a chance to peel back the covers for everybody to see. So welcome, guys.
Thank you, Andrew.
Thank you. Thank you, Andrew.
You know, perhaps you could tell us a little about the journey, Pete, that really inspired you to bring Sean in and to make this movie. Can you tell us what was this? Tell us about your journey.
Well, you know what happened. I've been involved in finance, macroeconomics, and finance in the commodities market. My father got me involved in that when I was young. He invested in gold in the 70s, and I think he made about 150 in 50,000 at the time, which was huge money in there. And he was listening to a guy named James Dines, and Dines never said to get out when Volcker raised the rates. So I think he gave more than half of it back. So he did, because he was learning. So he got me involved. I started, economics in school, but he had me started to read Richard Russell from Dow Theory, religiously. Then way back when I started listening to the Gold Antitrust Action Committee, Bill Murphy and Chris Powell, and all of the brilliant articles before this came out. And you couldn't find this stuff on the mainstream. The mainstream would just give you the garbage. I mean, Kitco had a guy named John Nadler who really couldn't pick his mother out of a carload of sheep. I mean, the bottom line is that this guy was supposed to be the head economist at Kitco, and all he would do is talk negatively about precious metals, about gold. And he was, I don't know, he might have been right once out of 100 times about anything he ever said. And but Kitco had the only site where they had a bunch of known people that were pretty good economists or that deal in commodities. So I used to go there, and then I found King World News, and I used to read John Embry from Sprott Asset Management. Way back in the day. So, I mean, and I found Richard Russell the most fascinating. Robert Rhea created Dow Theory. Richard Russell picked it up. He had the largest financial newsletter in the world, bar none. People used to read them all over the country. And it's a very interesting economic, theory that you base the transportation average, and the Dow in correlation to if they're both above their 50 and 200-day moving averages, it's a bull market, and if they're below those two averages, it's a bear market. And if they're one's higher and one's lower, one's above and one is not, it's a non-confirmation. And he would look at other issuances. They'd look at the Baltic Dry Index for the shipping lanes to see if they're shipping goods all over the world. Or he used Walmart as a proxy for the Retail Holders Index to see if people actually spending money, because if that was below its 200-day and 50-day, it would just basically mean that discretionary spending was lower, the velocity of money was slowing down, and that was trouble for the economy. So if you looked at a lot of little markers, you could tell if the market was healthy or the breadth of the market was healthy or it was weak. And he made these calls, way back when, and got a lot of notoriety, and he was a very kind gentleman. I think he was a great teacher. And then there's people in the market, like I used to read Stephen Roach from Morgan Stanley. At the time, Bill Gross from PIMCO, Mohammed El-Iran. They had all these really, good, people that I thought were pretty astute. But in the gold world, I first found when the whistleblower, there was an article that said someone tried to run you over in a car, and I'm thinking, what? What happened? So I wrote an outline of a finance film with Sean about 8 years ago, and I've always wanted to do a film, an in-depth film on the infrastructure of the financial system. So Sean called me one day and he says, "Hey Pete, you want to direct a finance movie?" I said, "Hell yeah!" And able to put that together. And obviously, his father did Wall Street and Wall Street 2, and Sean grew up in the film business. He went to Princeton, very astute. I worked with him on several occasions before, but we're both interested in exposing truth, in the world that protects people, because people should have transparency in everything that we do. And in the financial markets, it appears to be a cloak. There's different rules for the people on Wall Street than there are on the people on Main Street. It's a totally different, paradigm of investing. I mean, you really have to be extremely knowledgeable, or you have to have an inside line.
Yeah, you're right. It's all about good information, and it coming from an honest base. And And, with the right information, people can make wise decisions on how they can, especially how they can employ or even protect their wealth from the crooks running this multi-trillion-dollar game that we're about to get a preview of. Would it be okay to play that now, and so everyone can have a look at this?
Sure.
When we have a monetary definition of economy, we fail to assess the all-in consequences of the actions that we take.
The U.S. economy is reliant on this financial fraud to generate what they call GDP.
Naked shorting, simple version, is a seller sells stock that they don't have to a buyer who sees it in their account electronically, but it hasn't been delivered, and the buyer gives the seller money. We call that stealing.
We can't continue to have a system where Wall Street executives privatize all the gains and then socialize the losses.
They create the drugs, they deal the drugs, they have no impunity for anything that might become negative as a result of that.
Great job wasting my time. If you're going to filibuster, you should run for the Senate.
We certainly have a legal system that really favors the wealthy over the common person.
This is not some opinion. This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America.
If their goal was to try to force as many small businesses out of business, they would do what they've done.
It can't legislate its way out of a box.
Give me all those subsidies, I can make $16 billion. Actually, a trained monkey can make $16 billion.
I think the gold price is rigged.
1 ounce of gold is underpinning 100 ounces of paper derivatives.
The Fed is doing quantitative easing to infinity, printing money to oblivion.
We're setting a new global monetary standard, which will be Bitcoin.
They're nuts! They know nothing!
And that's why the rich get richer and the poor get poorer.
Wow, guys. I mean, how could you not want to be watching this movie? When's it coming out? When are you actually launching it, and how?
We're opening it. It's open December 3rd at the Laemmle Theater in NoHo, North Hollywood, California, right in front of the Television Academy. To qualify for the Academy, it's a Academy Award qualifying screening. Then we're going to open up on our platform at the paradigmofmoneyfilm.com. And where you can then you can get it live streaming, and we have some, obviously including yourself, we have some incredible people that we interviewed. Daniel DiMartino Booth, who you all know, who from used to work at the Houston Fed for Fisher and Lehman Brothers before that, and runs Quill Intelligence. Nomi Prinz, best-selling author and actually one of the first women managing directors at Goldman Sachs, wrote 2 bestsellers, Collusion and All the President's, Bankers. And Jim Rickards, we have Jim, who wrote 3 different bestsellers, and Jim was really fun. I like to call him the professor because, he's very knowledgeable about the history of finance, and he's got very interesting points of view. I mean, he always comes at things very pragmatically, but he's always fascinating to listen to. Grant Williams, we had Grant Williams, who's been around forever, who's extremely astute, in the money management world for years and years and years. It was a pleasure to have Grant on. He's got a podcast called Things That Go Hum in the Night. And then the illustrious Max Kaiser. I love Max. Max is like a rock star of finance, economics, and probably the most prevalent voice on the planet in regard to Bitcoin. And he's probably has more wealth than 10 of the last sitting presidents put together. He's a very, very bright guy, and he's not afraid to speak his mind. He certainly has called any bad actor out for any kind of frauds that they've committed in Wall Street. I mean, he did a show called France 24 back in the day, 10 and 11, and he was just unleashing on Goldman Sachs and the people that ran the financial system, at the Fed and the Treasury for all kinds of illicit behavior that basically created a wealth transfer, from the middle class, back into the 1%. We also have a gentleman that I think is brilliant named Edward Seidel. Edward Seidel was used to be an SEC attorney. He's an expert in the field of forensic accounting as well, and he was the largest whistleblower. What he does is he investigates pension and health plans. He's probably the most prevalent attorney in the country. He wrote a book with Robert Kiyosaki called "Who Stole My Pension?" It became a rather bestseller. And he speaks about the pension, the issues with the public pension plans and the private pension plans that are currently prevalent all across America. I mean, it's a $5 trillion, business that sometimes gets co-opted by fees, excess fees, and money management. So he basically explains how that works, because in pension funds, you have to create a 7% on your investment to make them work. And with the bond market trading over negative 4% of real rates, they have to make 9% in equities and 5% in fixed income. They're nowhere near that in fixed income. And most of the money managers that deal with pension funds are mostly in fixed income, and they're too conservative. Now, since they're behind the eight ball, they're trying to get into exotic investments that are very dangerous, for the average blue collar worker that's worked for 30 to 50 years and wants to have their retirement protected. I think that's in jeopardy with the current financial policy by the Fed. What do you think?
Well, absolutely, and you just touched on some very important things there. I mean, obviously, we're in the real money phase, real money world, which is gold, silver, and obviously has no counterparty risk. And what I'm finding is, you've just touched on negative real rates. Yeah, I mean, and if we were to really look at the proper stats, I think the numbers the negative rates you just talked about are probably very conservative. And that is bringing in, and this is the interesting part, is bringing in a huge amount of competing central bank, sovereign, physical gold buying. Smart money is buying physical. And what do we see on a day like today? We see 800 tons of gold cleared an hour and a half ago in London. Every day, the same thing. Well, 3 to 5 tons get physically delivered. And 9,000 odd tons of gold silver cleared every day. I mean, come on. What is the point of the point of this is there's so much paper swirling around this whole Wall Street world. And I think one of the things that when you're talking about statistics here, you're talking about numbers, we're talking about the Fed. But, if we draw back for a millisecond, what you and Sean are about to touch people who are driving a taxi, who are driving a bus, who are everyday people who are looking at this and thinking, holy smoke, this is, I need to know this stuff, because, talking about the concept of short selling, I mean, we can get down into the weeds about it, but what about just understanding the concept of short selling and how that can be abused and how, maybe you get a firm, a small company issue 1 million shares and suddenly 10 million shares get sold short and 250 employees get fired, lose their jobs. And then it progresses to, hey, that worked. How about a big corporation? Oh, that worked. How about a country like Greece? This is I think one of the things that really turns me on about what you are doing here.
I think, the key, to this was crafting a story, which Sean was really instrumental in, making it palatable, because when I first did it, it was a bit too intellectual. And Sean came in, nope, it can't be for someone like me and you talking finance. It's got to be something. So I'm going to let Sean talk about that process.
Yeah, Sean, please.
Making it relatable, certainly. I think this is something that, again, they call it the dismal science. Economics, they call it the dismal science for a reason, right? Most people don't want to sit here and just talk numbers. I mean, there are plenty of people, who are fascinated by Wall Street and the the whole concept of the market nature of buying and selling, and the people getting in there and being speculators. Now we have the apes, right, who are sort of jumping into this world and using, how do you say, and trying to alter and affect stock prices. But when I look at the situation, I was very much informed growing up because I came out of the 2008 time period, right? As coming out of college with 2007, 2008, literally, like, that was on my doorstep when I exited college, and I was part of that generation that essentially realized, wow, this whole growth that economic growth that the boomer generation basically was born into and took for granted in many ways. The boom of the post-war years, right, since World War II had made America the strongest physical manufacturer on the planet, and it was based in that physical economy that gave us really the world that we have enjoyed to this day, right? Everything from the conditions, the computing, the air conditioning, the quality of life that we basically, for the most part, in America and the Western world, take for granted, right? Is born of physical economy. And then basically we saw that growth. We saw, obviously, in the 80s, my dad did Wall Street to really show the speculative economy of these tycoons, and people like the Gordon Gekko is basically a personification of Ivan Boesky and others, right, who basically are going in there and taking over companies and ripping them apart. But it was symptomatic, as of the overall idea that money trumps physical economy. We can profit from destroying companies, tearing them apart, shipping off the machine tool sector to Mexico or Vietnam or you name it, right, to some third world country to build it cheaper. And so as a result, I believe, of that whole speculative boom, essentially you got to this place where by the 2000s they had to basically inflate the housing market to kind of keep the economy going, to pay for this, as we know, right, $3 trillion in the Iraq war and Afghanistan wars, estimated $3 trillion, probably more, but that was like all this money being spent. How do you keep it going? How do you keep America going? We got to keep fueling it with this, with debt, right, essentially. And the housing market was a major aspect of it. But people like Lyndon LaRouche, basically, and others were saying, look, this is going to explode. And I was looking at that and watching it in real time as 2007, 2008 comes, the Great Recession, the collapse of people's overall, I guess you could say that their overall assets, were devalued. The scare that we all faced of where we're going to work, how people. It was like articles. You came out of college and you're working at Starbucks. I mean, it was very real. That feeling of there's not a future for us as millennials, the same way that there was for our parents, and our parents were like, "Well, go get a job," and you're like, "Yeah, that's easy for you to say," but you have to realize that the actual real wage from 1970 has not grown, since that time period, right? And you're basically, as we know, like they're talking about inflation and whatnot, but literally, I mean, you just look at it, how much you're paying for everything from electricity, insurance, housing. Next thing you know, it's like you have no money saved. You have no ability to save money in that kind of modality. So I came at this from that perspective of let's help people to understand how the system works, how basically it siphons off from the working class and the middle class. Especially, we've seen the middle class shrinking, and it's now really before our eyes in this past year. It's like we thought 2008 was the biggest wealth transfer in history. 2020 was an even greater wealth transfer, right? Now 1%, the 1% in America has more wealth than the entirety of the middle class, which is just a shocking thing, right? But again, it was like trying to really just focus, Peter, on let's make this relatable to the working class and middle class people that are not necessarily engaged. Maybe they're getting more interested in stock speculation because of things like Robinhood, but let's make this palatable to like how this system works and how it's basically a parasitic system.
And how does this wealth transfer happen? It's interesting. So they have 2008, fueled by deregulation and derivatives and poor monetary policy. Then you go to the COVID crisis, and in the COVID crisis, if our government really wanted to help people, they would have frozen all debt obligations. I mean, why do you freeze debt obligations for renters and not landlords? So you want to take property from landlords, and you have commercial property that's 20% in occupied, so they're at 80% in default, bleeding billions of dollars a month. All the moratoriums or all the forbearances on home loans now, 2 months ago, got stopped, because that was good for about 13 or 14 months, I think. So if you were going to help people, why not freeze it off the board? And if you really cared about people's health, why don't you give everyone universal health care? But it seems like the system, the parasitic system, keeps on running. So, and by the way, the apes that Sean was talking about is the Reddit, the Wall Street bettors, that the original meme stocks. Just want to clear that up for some people, but it's a completely different world. I mean, look there. I mean, the real estate market's up almost 30% in the last 2 years alone. I mean, we've never seen that ever in the United States of America. And that's fueled by weak monetary policy. If you continually have rates at zero, and the Fed funds rate is 0 to 0.25, I mean, you're basically have a fixed income market that's worthless, and you're losing over 4% having that in the bank. So the Fed's borrowing money at a discount, and they get to borrow money at a negative 4%. But how does that affect Main Street? Price inflation. As if you keep printing dollars, even though, hey, the dollar is going up, everybody goes, the dollar is getting stronger. You have to factor the rate of inflation. If the rate of inflation is going up higher than the rate of the dollar, it's still negative interest rates. It's still detrimental, because how is someone on a fixed income going to pay their bills when the value of the purchasing power of the dollars keep getting less and less and less? So, and this is an issue, because it's like wealth confiscation by way of inflation. So this, this has to be stopped. The only way to deal with it is that, the people are doing hard assets or gold and silver, and the crypto market only Bitcoin. There's three major things that people are doing. One being the best digital asset in the world, bar none, and the other hard money, no counterparty risk. And the reason I like physical gold is because physical gold has no counterparty risk. You dump it in a private vault, and you're protected. They can't nationalize a mine. Nobody can go confiscate it that says, I want the money for the government. Or a mine can't go out of business. That there's no counterparty with it. Where, I mean, if you have capital in the bank, your counterparty is inflation. Your counterparty is the financial institution that it continues to remain solvent. How leveraged do you think the banking system is now, Andrew?
How leveraged it is? I mean, to be honest, there's no statistics that actually are believable anymore. I mean, so really, when you've got a Fed that is really ballooning a stock market, where every single asset manager that you come across is really forced to competitively keep buying and buying and buying and buying, or you get fired if you make the right choice, perhaps, and do the logical thing and the pragmatic thing, and to say, you know what, perhaps we should be hedging into gold, perhaps we should be hedging into. The trouble is that one person, if the whole thing blows up, nobody gets fired. But if you make the right choice and it doesn't, and you're lagging the market because you're hedging, then you probably get fired. And this is a ludicrous situation that we've come across. And I think you're just talking about, and Sean's talking about, making this palatable for the real world as well, which really comes close to my heart, because obviously we're dealing in paper everything. We talk about paper gold, talk about physical gold, but we also talk about paper. What about paper corn? There's some village in Africa, and every month somebody comes in and buys their 50 kilos of corn, and some idiot on Wall Street, just out of college, has pumped the price up beyond what he can afford. What does he do? He riots. It causes world global conflict. And I think this whole thing, gold is, to me, the focus point, because we see it every day. The footprints are so visible because we see, as wholesalers, we see exactly. Look, if you want to buy physical gold right now and you want to buy a kilo bar, you're starting to order into 2022. Who the hell's dumping gold today? It's purely speculative. If you want silver right now, wholesale silver, you can move out. Some of our orders are going out to September of next year. Who the hell's dumping silver? This is one crooked game. And I think the beauty of this is that you're cutting right across, not just us, what we focus on, but what other people you're bringing to education, to people who can say, hey, well, the first thing that I need to understand is how do I protect my wealth? And to understand how to protect my wealth before I make any money, before anything else, I need to protect my wealth. And, so really, I think this is one of the things where one of your guys says, I forget who it is, says, hey, what'll happen is in anything goes wrong, you know what, like in 2008, what we'll do is we'll privatize we'll privatize the profits, socialize the debt, and everyone else can suck it up. And we move again. And here we are again. And this movie comes out just at a point when this is about to go bigger and larger than ever we've seen. 2008 is pale in the rearview mirror compared to what's coming down the pike.
Well, it's like you said, they privatize the gains, the corporations on or Wall Street, and socialize the losses. So they can make the money, but when they go awry, then they get backstopped by the Fed. And like you said, on the 22nd, some entity dumped $1.25 billion of gold onto the marketplace, in a few minutes. And actually, it was less than 1 minute. So, how does that happen? Because the S&P futures trade less than 150 million in each of the same periods in a market that's 5 times as large as Comex gold. So isn't that on a radar? I mean, the SEC's been asleep at the wheel. I mean, the translation to that is 40 times the weight being pushed around in the gold market, relative to its open interest market cap than the S&P. So why is it on the radar? How come that doesn't get investigated? I mean, what is the CFTC doing, or the chair of the CFTC doing? That doesn't make a lot of sense. I mean, at the time now they used to have Bart Chilton, who was good, and now they have I think Gary Gensler is in, who's a very smart gentleman, but he has actually never done anything about these concentrated shorts that really are quite nefarious.
You've nailed it, Pete. It's about it's position concentration amongst just a very few entities that enables all of these games to continue. And you talk about Comex gold, but I even don't want to call it gold. It's not gold, really, is it? I mean, it's electronic. It's an electronic dot on a screen that is backed by nothing. And I think you're right. Where are the regulators? Well, hey, they know very well what's going on. And so you've got the CFTC that will give you this illusion. Okay, so talking about gold for a minute. And, so there are position limits for individual traders. How do you get around it? Well, what you do is you're compliant on one reportable exchange like the Comex, and this will work for anything and anybody on any level. But God, we'll just use gold as an example. And then you go to the over-the-counter markets, which are actually 10 times larger, the foreign exchange market, where there's probably 15 trillion of gold being traded around, around the FX side of the gold market. So what happens is that you've got one side that's reported, and position limits are X for gold and X for silver. But then you go to the over-the-counter market and take a 100-to-1 leveraged paper contract and call it legitimately. The regulators look at that as a legitimate hedge for a paper contract on the Comex. So you've got paper hedging paper. And so one side's reported and the other side isn't. And that's the game. And unfortunately, I met with Andrew Bailey, who is the current, who was obviously the current Bank of England governor. I met with him when he was the head of the FCA and said to him, hey guys, this is going to come down the pike again. You're going to have, what are you going to do when the banks need bailing out again? Because this thing's going to blow up in your face. You know, you've got the OCC, the Office of the Comptroller, not having to report, and you don't have to report anything if it rolls over, any derivative, if it rolls over in less than 14 days. Hang on a minute. What? You mean you can just roll it over for ad infinitum? So I bring that up to I said, what the hell? If there's one thing you should focus on, it is that. But no, nothing gets done. And so there's no regulation on one side, supposed regulation on the other. Everyone says, hey, we're in a regulated market, but you know it isn't regulated because one side you cannot see.
Yeah, I mean, it's if there's like a cloak, over the market, and now with all these meme stocks coming in, and and GameStop, that pushing it up because the Wall Street bettors or the kids on Main Street wanted to stick it to Wall Street, because they basically tried to raid the corporation, and then you have a company like Robinhood, who got fined there's $70 million for basically misleading their customers, because they halted trading because they didn't have enough capital. They didn't meet their capital requirements, and the CEO said that wasn't the issue when it really was the issue. And those hearings in front of Congress are eye-opening because, and then payment for order flow, which is an interesting game within itself. How do you pay for order flow? Basically, I'm paying for to look at all of your inside information. And so I get to pay money to see that, but I can actually benefit by that by paying for it. And somehow the regulators, the SEC, thinks that should be legal. There's a lot of things that are advantageous. So when they're saying you're giving you free trades, I think Robinhood last year made $700 million just on order flow. I mean, free trades. Wow. I mean, really, somebody's paying, and we're really taking care of the customer. But what's their line into the market? That's the market maker. How fast and how good are those trade executions, going to be? That's another story. But the reason we made this is how does this affect the ordinary person, like the people that are not in the market, when the Federal Reserve continues to have these abhorrent monetary policies where the rates are basically zero, and you got the 10-year bond trading at I think 164, something like that. So, and then that affects obviously the housing market. The cost of capital is very cheap right now, but with 30% employment in the pandemic, how did everybody afford? I was curious. How does the housing market? I thought the housing market was going to get sliced, and all of a sudden we get 30% unemployment, and boom, you got people 15 and 20 offers, for every house across the country. So where did all this, capital come from? They keep saying on the news that all this money is, being put in the system. From what? You think for the government handouts? They think that $1,200 or $1,500 twice is putting this money so people can buy houses and buy everything with it? That's a fallacy. Where is the money coming from? Because people can't buy houses on unemployment wages. So there's a big disconnect between Wall Street and Main Street. What do you think about this, Sean?
There's a huge disconnect. I mean, look, the idea of Wall Street, I think, is essential to capitalism, right? The idea of an IPO, the idea of being able to offer stock to companies. What's fascinating to me, and I think this is almost like the next step if we were going to do like a follow-up really, is how you start to look, because of public information, at who owns the public companies, right? And so there's a new documentary called Monopoly that just goes and just clicks on anything, Nike, Coke, right? You name it. And it's all owned by basically the same entities, State Street, Vanguard, BlackRock, right? and Berkshire Hathaway, right? And then these entities are themselves owning each other. You look at who owns BlackRock, and it's BlackRock, State Street, Vanguard, I was like at these other, So you're sitting here going, well, we should really dissect what these entities are, right? These companies, who owns BlackRock? Who's allowed to invest in BlackRock? Can most mainstream normal people can we buy into BlackRock as a fund? I don't think so, right? Isn't there a buy-in price that would be in the hundreds of thousands, if not the millions, to start buying in, right? So it's amazing how this is how the Gulf has how do you say, it's a gradual, it takes time to move away from the idea of what people think about capitalism. And then what you have is, I believe right now in the world, a misunderstanding, because they see how corrupt monopoly capitalism, I think you could call it as one expression, right? Might be that how corrupt monopoly capitalism looks, right? And you see these entities like the Facebooks or the Twitters, and obviously how much power they're exuding. And then in media, it's the same. I mean, it was like 90% of the media is controlled by 6 companies, and now it's consolidating even smaller and smaller. You're getting Disney buying Fox, you're getting Amazon buying MGM, right? So you're getting your media getting more and more consolidated. It's across the board. It's global. I mean, the Swiss did a study on this back in 2013, showing it was essentially 1,000 interlocking corporations that had the majority of the world's wealth in its control. So I think a real an expose or a really interesting documentary would be going to that next step of, who are these people? These the Rockefeller types, the Rothschild, but then obviously deeper, the people that finance the Soroses, right? Who are they that are actually owning the planet at this point? And there is a disconnect between, between the essence of what capitalism is about, which, as a system, there's a healthy nature to it, competition, right? We understand there's a healthy nature to it, but some people are depressed by the capitalist system and how they see, the exploitative nature of it, the discrepancy, the extreme discrepancy between wealth that we're talking about. So then they say, well, we have to go to socialism, which ultimately will still serve those same major corporations, those same major ruling families, right? Because they are so in bed and so wedded to the government, as we saw last year, who stayed open. The Amazons, the Whole Foods, right? The major corporations, while the mom and pop shops were the ones that were being shut down. So socialism is not the answer. And unfortunately, people are buying that because they're seeing a problem, but they're missing that there are more holistic solutions. And I think that might be another thing if we do a sequel or whatnot, to get into really the big picture of who rules the world, but what are the healthier solutions, more organic, holistic solutions, the idea of competition being integral to how a system needs to work and function. If cooperation and competition both, but you cannot have this level of collusion between massive international corporations owning governments, essentially. I mean, I think pharma is the great example right now, where people are sitting there still telling me that the vaccines are free. I mean, can you imagine how brain dead you have to be to actually say, yeah, the vaccines are free, they're giving them away. They're giving them away because, let's see, the government is paying for it, which means the government's money is your money. It's taxpayer dollar. So you are basically subsidizing these vaccines that are now being mandated by the government. That's like the best business of all. I mean, you can't ask for a better business, right? The government pays the Pfizers and the Modernas and whatnot to develop these vaccines. Then they pay them for the vaccines. Then they mandate people to take the vaccines. That's a perfect business model. No wonder they're getting hundreds of billions of dollars in profit.
Yeah, and then I recently read that Trudeau has an interest in the vaccine, and he bought 3 times as many as was necessary for Canada, and he makes a profit off of every vaccine, or EUA medicine, I should call it. It's really interesting, Sean, when you said something about this monopoly, because there's 6 major corporations own all of the media companies, so that's a monopoly. But what you're really stating is that it appears like it's like not free market, a combination between free market capitalism and socialism. It's really an oligarchical system because it's really run by an oligarchy. And in order to do that, there's an old saying: "He who owns manufacturing owns the world." So America, we gave away our manufacturing base. I think the NAFTA agreement, I think with under President Clinton, and then also to Phil Gramm and Bill Clinton repealed the Glass-Steagall Act in 1999. And then on the back of that, the Commodities Futures Modernization Act in 2020 allowed derivatives to be placed on, oil and gold and commodities, which never happened before, with unlimited risk. So, I don't know. I think there was something like 2.3 quadrillion derivatives in the world today. So, but there's always a counterparty risk. But what happens that people don't understand, if the counterparty doesn't pay up, if one side defaults, the gross exposure still remains gross. So, you're talking about it damaging a lot of people, but like Sean said, if you're closing hardware stores and all kinds of small businesses, and you're allowing Home Depot and Walmart and every department store stay open, you're basically systemically bankrupting the middle class. And if you're bankrupting the middle class, they become dependent on the government for them to live. And I think, Richard Russell, there was an old saying that a government big enough to give you everything you need is also big enough to take everything you have. So, in the olden times, and they used to have a physical economy where they used to have a government national bank, and the Congress used to vote on infrastructure bonds that used to be bet out to the private sector at a discount. So they could get education bonds, rail bonds, water bonds, bridge bonds, and they would bid it out to the private sector around the United States, and our American workforce would have created the strongest manufacturing base in the world. They would create a great velocity of money. They would create a boon, an economic boon for people, because it would keep the people in the United States working, while we built up our infrastructure to become the most powerful country in the world. They all of a sudden decided against that model and gave it away. And before they had any income tax privately, they had the greenback system by Lincoln and Henry Carey. And then they don't teach the American system of economics anymore. They just teach Austrian economics and Keynesian economics. Keynesian economics really runs on the premise that you can't solve the problem of overlending and overspending with more overlending and overspending. That's a definition of insanity. And you're basically burning the dollar to the ground. And since no fiat paper money has ever lasted, really about 100 years, the U.S. dollar is long in the tooth. So, the system, it's not a matter of if, it's a matter of when. The system will have to be reorganized, bankrupt or reorganized for a new system. And maybe that's why Janet Yellen increased the SDRs, the special drawing rights, to back the central banks up. And respectfully, the central banks own 98% of all the gold in their vaults. So if there was an economic event, they would benefit. But there is, Jim Rickards and a couple other economists were stating, well, the only way out for us to compete with China, because they look to be wanting to back their digital currency, or they're already buying oil and gold in yuan, oil and gold with the yuan, and it looks like they're making a move to back their currency to take over from U.S. hegemony. And if that happens, the only move for the United States would be to revalue the price of gold, to monetize their own debt, which would also benefit China, but it would also change the game in the U.S. markets. But who would benefit? 2%.
Oh, big time. I mean, and how much of the? I mean, look, you had Mooney recently asked to audit the Fed, and again that fell on deaf ears. And I think the reason I actually believe that out of these 8,300 tons that the Fed has rights to, I mean, the Fed doesn't own any physical gold. It holds gold certificates, obviously. They're issued to the Fed by U.S. Treasury and valued at $42 a piece. So basically, even assuming that this 8,300 tons isn't rehypothecated, which to me, I'm sure as hell it is, because when Germany came for its 300 tons out of this 8,300 tons sitting there, it was going to take 7 years to give it back to them. They weren't even allowed to audit their own gold. They weren't even allowed to visit the vault. Hey, come on, hang on a minute. We can ship 25 tons on a single flight. This could have been done in a week. I mean, so why 7 years to repay these German assets? So something smells here. Something smells bad. So when you think China, probably we in this wholesale market, we deal with sovereigns. We're pretty sure China's got probably 25,000 tons of gold unannounced, salted amongst the various state-held banks. Could be with a click of a mouse. Could be called in to back their currency. If the Fed wants to do the same thing, well, I don't even know if that gold it's been lease swapped and God knows what. So I think we've got a real issue here. But I think one of the things, as Sean just said, I think you probably need to do a follow-up as well. But I think what the kind of person that's going to look at this movie, this great movie, because I've seen you. Thank you for sending me a copy of it a while back. Even if it didn't have all the bits and frills, but when I saw it, I thought to myself, my goodness me, this is going to be looked at. This is about free speech. This is you just talked about the media, and it's like there's no free speech anymore. And so what you're doing is people have to come to things like this, and the kind of person that comes to this is the kind of person looking to take responsibility for themselves. And because that's really what this is all about. This is what we're all about. It's about trying to give people enough information to make their own decisions, because that's really what we're trying to do here. And without this information, how do you make a good decision? And I think, as I said before, I think the first decision you have to make, because bail-ins around the corner, we're about to have a massive explosion of the stock market. It cannot be valued at this level for much longer. What do you do, guys? First thing to do, preserve your existing wealth, whatever that is, land, property, houses, whatever it might be, gold, silver, anything tangible. China's buying forests, land, infrastructure. What are we doing here? I mean, this is something that we need to act, and we need to act pretty quick. And I think what the kind of person that's going to come to this movie is trying to take that step, and you've cast that net out. And to me, that's what I really like about this.
Thanks, Andrew. The freedom is. I think freedom is very important, and when you have some, more finance, you can create yourself, more freedom, because in the world today, it appears like some of our freedoms are under assault, and some of the people that we've had in this film, Lynn Alden, Lynn Alden is extremely bright. She has a very pragmatic, point of view about economics and following the money. And then Nico Goudard, who used to be the head of derivatives at Fortis Bank in London, who is a PhD in actuarial mathematics. He has a deep understanding about how the bond market trades. And I also learned a hell of a lot by speaking to some of these extremely, knowledgeable people. But, the thing that I believe we all have to remember is that, truth and transparency and accountability, as a human being, all of us must start claiming accountability and not blame our lives, or not be going in any kind of a victim mentality, because if we want to change the world, change the way you see it, we have to be accountable for our planet. We have to be accountable for our government. We have to be accountable to make sure that we demand that our Constitution is upheld, and all human beings must act like the president. We all must act like our own presidents, and act with integrity and kindness and goodwill and charity. The world is going through a paradigm shift. It's now time, never before then, to wake up and honor our own sovereignty and honor our own spirituality. Because if this is an inflection point where we have to realize it's really individuality is an illusion. It's basically one consciousness, and we cannot continue to be separated, through the reactive mind, because they put this garbage on the media. One side feeds into this, one side feeds into that. People react and they suck up all their energy. I shut that TV off, throw it out the window, and start meditating, and start getting in touch and start being related with your brothers and sisters, and move forward in a much more pragmatic, where you're a unified consciousness for the benefit of all.
That's so well said. And Sean, any closing comments? Because obviously we're going to put a link to this movie. We're going to obviously tell us, exactly where it's going to be shown. All those kind of things will be on there. We're so supportive of what you're doing. Thank you so much. But Sean, any closing comments?
Yeah, I mean, I think we are at this sort of bifurcation moment, within humanity, the splitting. I think that the vax mandates are really a clarification of this, because it seems to me that you're looking at, we know it's a transhuman agenda. I mean, this is not a secret. This has been decades in the coming, and now they're really at that moment. Klaus Schwab has helped clarify this, for people to think this is conspiracy. Schwab, the head of the World Economic Forum, the founder of it, he's basically, talked about how they want to merge. This is the fourth industrial revolution, they call it. We are looking to merge the human with the machine, essentially, and to control the digital, biological, and physical identity of the human being. So where is this going to take us? It's going to take us to an interesting, challenge, basically, for those who are still dependent or believing in the matrix. We're saying, well, if I just get the shot, I can go back to working, at the whatever, at the restaurant, at the pub. I can go back to shopping there, and you're basically not realizing that this is deeper than just going back to an old economy. This is actually saying, no, we should not be. We have to make a choice with where we contract going forth. Who do we contract with? Where does our economy go? Where does our money go? Do we want to invest in and put money into people of similar values and belief systems? And I think this is what has to basically shift is from a world that is an empire essentially dominated by, as Peter clarified, an oligarchy, and an oligarchy that essentially wants humans to be as roboticized and controlled as possible. And do you want to basically submit to that and basically surrender your humanity to that, or do you want to start shifting your economy, your wealth, your energy, which is really what currency is? Currency is it's energy. So when people talk about money, I would just think it's energy exchange. Where do you want to exchange your energy? Do you want to exchange it with the global, or the globalists, the global corporations that don't value human beings or human life, or do you want to shift your energy, which is your money, your assets, your intention, into contracting and agreements with people of similar values, of similar intentionality, respect for each other, honoring each other? I mean, this is the way I see where it's just going to be a gradual shifting, and maybe not gradual, maybe it'll be rapid, because there could be, obviously we know there could be crashes in the process of the economy and all types of things that really force this in a more immediate, urgent way. But you can't look at this whole pandemic lockdown and the pandemic crisis without realizing that you're looking at the death of a financial system. And I think this is the problem. People don't have the capacity to really see this as an economic shift that's working to take place. The great reset that the World Economic Forum is promising, to essentially reset you and turn you into a computer. People really think, oh, we just go back to normal, but they've been very clear. Schwab and others have said there is no go back to normal. They're not going to allow the economy to go back to what we thought was normal. It wasn't necessarily a healthy economy anyway. It wasn't a healthy way of life. But if we can't shift into a better, healthier, more holistic way of being, then you will end up as a transhuman. You will end up, I believe, roboticized.
Yeah, and you're talking about real people now, real people with, as Pete also says, this is about human beings interacting with human beings and circumventing and having enough education to figure out, well, what do I do to take responsibility for ourselves? What do we do for our families, for ourselves? And it's not just a run about buying cans and guns and got it. It's not just about that. It's about taking full responsibility financially and in every way. But please, I want to ask everybody, please get this movie out there. follow the link, get it out there, tell everyone about it, because this is the first step where we can really see for the first time. I think this is actually going to cast that net out to people that have never ever seen anything or thought about things that are discussed here. And yeah, some of it's technical, some of it's really to the heart. And so I would ask everyone, please share this and put it out there.
The last thing I want to say is that that I believe in a new system based upon economics, where all of our work goes into the preservation of the sacred Mother Earth, who sustains all life for every sentient being on this planet, which is really being ignored. This administration is doing nothing. They basically misled the entire public in their campaigns, like most cabinets do. They're doing nothing to protect the planet. And the only way to deal with it is to stop cutting down the rainforest in the Amazon. And because our ecosystem is thrown out of balance, and the plants and animals, birds, bees, insects, and mammals are getting extincted at alarming rates, and they're losing their habitats, and you're throwing the ecosystem out of balance. Mother Earth is always taking care of us, responsible for everything we have and everything we do, and we have to shift our consciousness to start being in a symbiotic relationship with our planet. That's it.
Thank you, Pete. Thank you.
And there you have it. I told you this was going to be an exciting episode, and thank you so much. I can't wait to watch this premiere. I've got it bookmarked. We're ready to go. Amazing. So that's all we have for you today on another fascinating episode of Live from the Vault. You'll find all the details about this new film and how to watch it. Just look for the information below, and we'll provide links. And please help us spread the word about this channel by liking, by sharing. Smash that subscribe button. Click on the bell notification if you'd like to be notified as each episode goes live. So with that, we'll see you next time on Live from the Vault. Bye for now.